Hi guys, I'm Phil Town from Rule 1 Investing. Today, I want to talk to you about penny stocks. If you've been researching investing, chances are you've heard the term penny stocks. There's a lot of different viewpoints about these kinds of controversial stocks. For every person warning you that they are the quickest way to lose everything you own, there's another person who can claim that they are the fast track to making millions of dollars. So we see it both ways out there. Okay, so what are penny stocks? They used to be defined as stocks that traded for less than $1, hence the name penny stocks, since their price was measured in pennies rather than dollars. So now, however, with the devaluation of the dollar, the SEC has expanded the definition of penny stocks to include any stock that trades for less than $5 a share. So most penny stocks are not sold on the major market exchanges because the major market exchanges have a limit of $5 a share. So nevertheless, buying and selling penny stocks can be done with, not a lot of problem using an online broker who goes out to what are called the pink sheets. This is where penny stocks are traded. Now, there are a couple reasons why penny stocks are so cheap. Many times, a company's shares sell for very little because the company is small, it's new to the market, it's relatively unproven, has less cash, has less resources. And the thing is, though, that small companies don't always stay that way. All right, let's consider BJ's Restaurant, which started out as a penny stock and now trades for around $30 a share. So, hey, it doesn't mean it's a bad company, all right, just because it's a penny stock. Investors who invested in BJ's Restaurants back when it was a penny stock and they held it through all the ups and downs of their growth until today, they would have seen a 28,000% return on their investment. So that's pretty good, and that's the lure of a penny stock. If you luck out or you jump in early on a small company that makes it big, you can turn a small investment into millions of dollars. And that, by the way, is one of the huge advantages of being a small investor. The big guys, the Warren Buffetts, Charlie Mungers of the world, typical fund managers, no way can they buy into a penny stock because it simply isn't big enough for it to make any difference if they're vastly successful. I mean, Warren Buffett could have bought BJ's Restaurants, made a 28,000% return, and it wouldn't be a rounding error on the billions that he's actually investing. So with that said, these results like BJ's are certainly not typical, okay? And small companies fail maybe even more often than they succeed, meaning your investment could easily drop to zero as they go into bankruptcy. So aside from being small and unproven in many ways, there's another much more controversial reason why penny stocks are so cheap. Sometimes companies purposely drive down the price of their stock by dividing their valuation up over first millions and then hundreds of millions and then billions of shares to make their stock a penny stock. These companies do that in order to lure an uninformed investor with a really cheap price. And if a company has an insane amount of shares outstanding, you should be very, very careful, and in general, just avoid those kind of companies. One owner recently, this is, by the way, called dilution, where you start off with 1 million shares and end up with 1 billion shares. Your investors keep having more shares for this company that's the same value. So in other words, a $10 pizza this big divided into 2 shares, you own half the company. You divide it, some more, you own maybe 10% of the company. And you keep cutting those slices smaller and smaller, pretty soon you only own 1% of the pizza. And then eventually your dilution becomes so huge that it's worthless. You just own pennies of the pizza. So let's address this kind of potential risk, because company owners do this. They go out and dilute the company and dilute it some more, and then bring in investors, and the stock price goes up, and then they dilute it again. And they end up doing that often for reasons of their own profit. So let's address this a little bit, since this is where most people who are talking about penny stocks have questions. For one thing, penny stocks are almost small, relatively unknown companies, meaning that you're going to have more limited information from analysts about them to reference. There'll be a lot less written about penny stock companies. That means there's only so much you can get from other people about the business. Now, that's not a bad thing, right? We shouldn't just go buy into a company because some analyst thinks it's a good idea. We have to understand the business on our own. So really, when you get down to it, there's no difference for you researching a small penny stock company that's public and providing public information than one that's as big as IBM. You still have to do the homework. So don't let that be a problem. Next, small companies that are fairly new are inherently likely to go bankrupt more than a large established company, meaning that the risk of their stock dropping all the way to zero is sort of looming in the shadows. And that kind of violates one of the rules that we have. We really like to have companies that have 10 years of data for us to be able to see that they've gone through some sort of part of the business cycle where, there's been a recession in their industry and we can see how well they did. Because often when the tide goes out, that's when you get to see who's swimming naked. So third, penny stocks have less liquidity. This is actually a pretty big problem because they normally trade at much lower volumes. They trade in maybe hundreds or thousands of shares a day, not hundreds of thousands to millions of shares a day. And what that means is particularly when you're doing this kind of a trade through a broker on the pink sheets, you may have a hard time selling the stock you buy, and you may have to sell them at a much lower price point just to get rid of them. I've had some, your basic repetitive experiences with penny stocks where the stock was 12 cents when I start buying in. Me and a friend of mine, we buy into this company, great little company. And, as we're buying in, the price is going up. By the time I get fully invested with, maybe $50,000, the price has moved from 12 cents up to as high as 80 cents in this one company. And we're thinking, wow, we're geniuses. Look at how great this investment is turning out, right? And then, of course, we find out some information more about the company, the story changes, and I start to sell. And as I'm selling, it goes 85 cents to 70 cents to 60 cents. I can't get rid of anything. And the price is just continuing to drop. Why? Because there's just no buyers out there. There's very little liquidity. And the stock price goes down to a nickel. And this is a common story for penny stock investors. The higher the volatility, the more that price can jump around in the spread between what you can buy it for, which is here, and what you can sell it for, which is here. And by the way, guess who gets the difference? That goes to the broker that's hustling you to make the deal. So with all of that said, penny stocks, they don't have to necessarily be a risky investment. If you apply all of the standards that we teach you, the 4 M's, the strategies of Rule 1 investing to penny stocks, no reason that you can't manage your risk just fine and find great investment opportunities in these low price stocks. Might take you a little longer. You might have to dig a little deeper, right? Because you won't have professionals pointing you to particular pieces of information for you to do your research on. But that's okay. That's probably better. And here's the thing. There's no major pros out there investing in these penny stocks. This is where if you apply Rule 1 standards to these companies and find, that little gold nugget in that pile of rock, you can make a lot of money in penny stocks by buying a wonderful company that has a big moat with great management, with talent and integrity that you can buy on sale. Now, if you choose to try this out, just please make sure that the companies selling these stocks are a 4M company. It connects with your ethics, that's the meaning, and you understand the industry. The moat is that this little company has some intrinsic characteristic that protects it from competition in its little niche, okay? Third, it's got great management with talent and integrity, people you trust. Think about it like this. You should probably like them well enough that that person could become your brother-in-law, okay? And then you only buy them at a price that's well below the value of the business. You need, in penny companies like this, you need a margin of safety more than ever, all right? Now, if you do this, you really can find great opportunities regardless of whether the stock is priced at 10 cents or $10. You just gotta do your homework. Now, with that said, You got to be very careful about investing in penny stocks, really do. And you have to make sure you're really doing your homework, dotting your I's, crossing your T's. This is probably not where you want to start as an investor for lots of reasons, including the fact that you will not have a guru investor to clone as you go into this penny stock because they're just too big to be there. So it's all going to be up to you. It's really exciting, but I wouldn't say it's the first thing you should be doing as you're learning to invest. Now, I'd love to hear from you. Have you ever invested in penny stocks, and what happened, and what did you learn from that investment? So leave a comment below with your answer, and I'll be sure to follow up with you. And thanks for watching, you guys. Now go play. You guys, if you enjoyed this video and you feel it was valuable for teaching you a lot more about penny stocks and investing, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. We got a lot of stuff. So don't forget to click the button on the screen for a free gift, and thanks again for watching.